forget. So, as I said, the most important thing is for you to note levels and for you to anticipate or wait and see how price reacts on those levels. Wait and see how price reacts or respect those levels. Those are the most important things. So, but I will really recommend that you go online and watch a lot of videos. Watch a lot of videos on support and resistance. Learning how to trade is actually watching a lot of, it's actually about watching a lot of videos. You cannot just rely on one or two things. You have to watch a lot of videos and really understand, to really understand what all of this is. So please, I recommend that you go online, go on YouTube and keep on watching until you have understood anything. Anytime you're not clear about something, you need like to ask a question. You can message me directly. I'm going to give you uh explanations. So let's go to the next item. The next item is candlestick patterns. Candlestick patterns. Now, candlestick patterns, they let's go back to the chart. Let's look for a candlestick. So candlestick patterns are like patterns that a candlestick form. You try to use that pattern uh, to understand what that candlestick is saying. Because all of these candlesticks you see right here, right? They are information that the market is passing on to you. These are all information that the market is telling you. So the market is using these candlesticks to pass a message to you for you to understand what is going on. So candlestick patterns are the different ways the candle forms, and you use that way now to understand what the market is likely going to do because of what the candle have formed. So there are many different candlestick patterns. In fact, there's a book on candlestick patterns of thousands of different candlestick patterns and what they mean. So whenever a candle prints like this, what does it mean? Whatever a candle prints like this, what does it say? Whenever a candle prints like this, what does it say? That's basically what a candlestick pattern is. And I'm going to give you a few of them, a few examples, and tell you what it is. And then there are actually a lot, but there are just few that you need to know and understand and work with. And I'll even explain to you how I usually use candlesticks to know what's up, what is likely going to happen in the market without necessarily cramming so many candlestick patterns and say, oh, this is a tweezer top or tweezer bottom. Oh, this is a hammer. This is this one. So, no, there are a lot of candlestick patterns. We have pin bar, indecision candle, that's an indecision candle. We have a bullish engulfing candle. We have a bearish engulfing candle. We have a hammer. We have a hanging man. We have a tweezer top, tweezer bottom. So these are just examples of candlesticks patterns from just the top of my head. So you could also browse that candlestick patterns. You will see like an image that shows you. Let me quickly browse one for you to see right here. So let's see candlestick patterns. So you will see that there are a lot of different candlestick patterns. Now, let me open up one like this. So, how do I make this bigger? Let me download the image so that try and make it bigger. Anyways, we'll come back to this, but let me go back to the chart so that candlesticks. All right, let's just continue before we get back to this. So let me explain a few candlestick patterns for you and how you could use it to like also further like deduce what the market is trying to do. Now look at this candle right here. So are you seeing this candle here?
Yes, I can see it.
So this particular candle that I'm pointing out, it's called I guess it's a hammer candle. When a candle has a long wick, especially a bearish candle, it has a long wick to the downside and a small body like this. What does it tell us? What does it mean? So what it means is that on this particular candle, there were a lot of sellers in the market. Remember, I told you there are two different type of candles. There's the bearish candle and the bullish candle. So in my case here, the bearish candle is black. So anytime that the candle is going downwards, is selling, the color is black. So look here, you see that this candle color is black, right? And it has a very long wick to the downside here. So what information can you learn from this particular candle? What this candle is telling us is that there were a lot of sellers in the market on at this particular price. The sellers were able to push the price down all the way to here, but then they were not able to sustain it. Buyers came back into the market and pushed the price back up. That's why we have this candle have a long wick to the downside and a small body. So whenever you see something like this in the market, it means that there are more buyers in this particular market. And that's why you see that the next candle we got a bullish candle that went to the upside like this. You get? So that is just a very simple way to understand what price is saying. Now, when you see something like this, what does it mean? It means that there are more buyers, right? That's why you have a long wick to the downside. The sellers were not able to sustain the move. Buyers came back and took control of the market and pushed the price back up. And if you see the next candle, we have a bullish candle. Now, not every time that you see this thing happen that you will get to have a bullish candle form next. It's not every time. Sometimes you could still have a bearish candle continue down, but at least you should understand that, okay, buyers were in control of this particular market, this particular price here. If you look at this particular place, you see we have a wick to the downside. Buyers push the price up, but still, the price still came back and continue going down, you get? So not every time that you see something like this, that to make you would think that, okay, the market must definitely continue bullish. No, you have to incorporate this information you see here with a lot of other informations. You have to incorporate it with saying that, okay, are we in a support or in a resistance? Are we at a key level that we're going to expect to see buyers or not? You get? So if you were in a key level, it's easy for you to continue saying that, okay, we're going to continue seeing the buy because we're in a key level of support. So or resistance. So market is going to continue buying. Now, let me use this next candle stick pattern to give you a very good example. Now, I told you that whenever price comes into a level, there are a few things you should expect. You expect that the price is going to what? Respect the level or break the level. So now price came into this level I had drawn out here, right? Took out this high. I remember that example I gave you that whenever price takes out high, my strategy is, as an example, will be that, okay, price is going to go down. So I have two confluences here now. Confluence is like more reasons behind your decision on either buying or selling. The more reasons you have, the more confirmations you have. That is what is called the confluence. So now, one confluence, assuming this is my strategy, you get one confluence, price has taken out a high right here. So I'm expecting that price will go down. That's one. Two, price has touched a level right here. So I'm expecting that because we're in a downtrend, price has been moving down. So now it has touched a horizontal level. So it should respect it and continue going down because we have been in a downtrend. That's my second confluence. So first, in fact, third, first confluence is it has taken out a high. Second confluence is that it has touched a horizontal level. The third confluence is that we are in a downtrend. Now, let's look for another confluence. There is a candlestick pattern that is called an engulfing candle. Engulfing means let the next candle cover up the previous candle. So we have bullish and bearish engulfing. A bullish engulfing candle is when the current candle covers the previous candle to the upside. I remember I said bullish is buying. Am I going too fast, Said?
No, you are not.
Okay. So now look at this candle. Can you see this bullish candle here? This blue candle here. that this cursor is on?
Yes.
All right. Now you see that the next candle is a bearish candle that moved to the downside. You see it right here, right?
Yes, I can see it.
Now, good. So this is a bearish engulfing candle. Bearish engulfing in the sense that the candle that covered the previous candle is a bearish candle, a black candle. And if you check it, you see that the body of this candle is big and it has covered the body of the previous candle. You get? So whenever you see something
Yes.
like this in the market, it means that there's a lot of selling pressure. It means that sellers are more in the market. And whenever you see something like this, you're likely going to see a continuation to the downside. You're likely going to see a continuation to the downside. So this is now a bearish engulfing candle. And if you see it like this, it means too many sellers were in this market to the extent that they pushed price and covered the previous bullish candle. So now this is the fourth confluence. Because we're in a downtrend, I'm expecting price to sell. Because we have taken out the previous high here, I'm expecting price to sell. Because price has come into a horizontal level down right here, I'm expecting price to sell. Because price has given me a sign that it's going to sell, it has given me a strong bearish sign that, okay, it has covered the previous bullish candle, a bearish engulfing candle. I have more confidence now that this price is going to sell. So I could have placed my trade here. I could have placed my trade here and put my stop loss above this wick here, then put my take profit down here. And you see that it actually went our way. Let me bring up this. So you can put your stop loss here, put your take profit. Maybe let's say you were even targeting down here and price didn't reach down here, fine. You didn't win the trade, but if you were targeting somewhere around here, let's say 1 to 2 risk to reward ratio, you see that you have gotten a winner on this trade from this simple idea of a bearish engulfing candle. So this is like more confluence to your trade. So do you understand this candlestick pattern I just explained? Bearish engulfing candle.
Yes.
Good. So that's for
Yes, I
bearish.
understand it.
Then there is bullish engulfing candle, which is just the opposite of what I have showed you right here. Now, let me show you a bullish engulfing candle. This right here is a bullish engulfing candle. Even though the body did not cover the complete wick, but as far as it has covered the body of the candle, is bullish. So this is a bearish candle. Then we have a very strong bullish candle that passed that the body is bigger than the previous candle. And if you notice, you see that after this thing formed, eh, price actually continued going to the higher to the upside all the way to this top. So can you see the power of engulfing candles?
Yes, I can see
You
it.
know, some people they trade only in this thing, I tell you. They just wait for price to get to a horizontal level on the chart, especially in a trending market. You get? So let me draw
Yes.
this. Now look at this particular place. Now this is a downtrend market, but all they do is they
Yes.
draw their horizontal levels. Now immediately price broke this place to the downside, they draw this level and wait for price to come back into that level and see the reactions. What they are going to be waiting for to see is how the candlesticks are forming. Is it giving me wicks to the upside? Now, see, there's a wick here, right? It means that price tried to go up, but sellers pushed it down. There's a wick here too. It means price tried to go
Yes.
up, but sellers pushed it down. So they are going to be watching to know what's up. So the moment they see an engulfing candle like this particular one, you see that the body of this candle covered the body and the wick of this previous candle right here. So immediately they see something like this, they're going to place
Yes.
their trade and put their stop loss above. So they will just place their trade like this and put their stop loss above this wick here. Then they will target below. So I don't know if this is making sense to you.
Yes, it is.
Are you now beginning to see uh how to trade using a strategy? So this is just simply how trading works. and how you could place a trade by using some of these strategies, support and resistance, horizontal line, and then candlestick patterns. So this is how you
I
could
think
use.
this candlestick pattern is more tangible than the previous one we did. I mean,
Yes,
it's
of course,
more
of course.
straightforward.
Exactly. So the more strategies you learn, the more you get to understand which one works more, which one holds more, and which one is the best one for you to use. Believe me, when we continue this class, I will teach you some advanced strategies. You will now understand it better. You may not even care about engulfing candles again. You'll be there are some particular things you start looking out for because you will notice that almost this thing usually works a lot of the times. You understand? So that's it.
Yes,
So this one is candlestick patterns. I told you that there are a lot of them, but there are very plenty. So you
yes.
could I can actually speak outside. I'm from the north too, Said.
Okay.
Yeah, yeah.
I don't know. I told you I'm sorry.
No, I'm from the north. I'm from Taraba State. So there are actually a lot of them. But me, as a trader that I've been trading for a while, trust me, I don't care about all of those things because I've come to realize what is the most important thing in the market. But there are still just a very few that I use to understand what is happening on the chart. And one of them is uh, engulfing candles, bearish and bullish engulfing candle. That one is it's very common and it's very, very useful because it helps you to understand what is happening. It helps you to understand the volume of either buyers or sellers. So for here now, you get to understand that there are now plenty sellers in this market that are likely going to push price to continue going to the downside. You understand? So another candlestick pattern that I look out for is wicks, just to see wicks. Anywhere, anytime price gets to a horizontal level and I see price giving me plenty wicks like this, I know that, oh, this is a sign that the buyers are trying to push price to the upside, but sellers, they're no greed and they push the price come back down. You understand? So wicks is also something I look out for. So there are many different candlestick patterns. You could just check them up and understand what they mean, but trust me, don't waste your time on too much on that. Just learn them and have them at the back of your head to understand that, okay, this is that, this is that. There's also what we call indecision candle. Let me look for an indecision candle. They call it a pin bar. Now, that candlestick is also very, very good for understanding when to trade a reversal. Now, I found one. Now, can you see this candle here? Can you see this candle here?
Which one?
This particular one that the cursor is on, that has very long wick and very
Yeah,
tiny body. Now, this
very
is
tiny body. Yes.
exactly. So this candle now is an indecision candle. Anytime you see an indecision candle at a key horizontal level, it means that you're likely going to see a reversal. It's a reversal pattern candle. So now look, price was going up from here, right? It was going up. When it came to this particular level, we now got an indecision candle. What does an indecision candle mean? It means that there's no winner between the buyers and the sellers. They were both they were both the same. There was no winner. It was like a draw game. So buyers tried to push this market up but could not. Sellers tried to push this market down but could not and came to an indecision and they left the price at the middle. So whenever you see something like this, it's an indecision candle and it's a reversal pattern. It means that this market is going to reverse from its correct direction, of which if you see it did. So it was actually buying like this, but then you got an indecision candle and it reversed. So whenever this happens in a key horizontal level, it's a sign that you can you can trade the reversal, you can go against the market. So now we have another block here. This is another block, which is also our key, which is a key horizontal level, right? So when we got this other block, next thing, price came back to it and then gave us an indecision candle like this. So when you see something like this, it's a good sign for you to reverse. The price wants to reverse. So of course, price reversed and continued going to the downside. Now, this you also add it to more confidence and say price has been on a downtrend since it has been on a downtrend. It has come back to another block, and then it has given us indecision. So we're likely going to continue seeing the bearish move. And you place your trade and put your stop loss above this week and target below. Do you understand? So if you had done this, you will have been in the trade and you will have made profit from it. So do you understand indecision candle now?
Yes, I do.
Good. So that is just another example of a candlestick pattern. So as I said, there are actually plenty, and then you can just go over the net and get to know more of them. But it's just like an extra knowledge for you. As I said, strategies are your ability to understand a lot of different things that you can trade and make money from, to help you get a better reason for taking your trade, to help you gain more confluences for taking your trade. So the next thing we're going to discuss, which is the last, is chart patterns. Chart patterns. So what are chart patterns? Chart patterns are actually the patterns that the chart is forming, that the candlesticks are forming on the chart. And we also have a lot of different chart patterns. We have a lot of different chart patterns. We have the W pattern, we have the M pattern, we have the double top, we have the double bottom, we have the triple top, triple bottom. We also have head and shoulder. So all of these things are different chart patterns, and all of them have their different meanings. Now, let me start with the basic ones. Let's start with M pattern. So you will see something like this happening on the chart. Price forming like this. When you see price forming something like this is called, you could call it a double top or an M pattern. So this is one top, this is another top. So it is called a double top. Whenever you see price forming something like this at a horizontal level, you can predict to say that, okay, we shall continue to see a downward movement in price because it has formed a double top. Shall I give you an example of double top on the chart? Now, this is a good example of
Yes.
double top. This is one top, this is another top. So you could say here is a double top. And as you can see, we saw a bearish movement on price pushed to the downside. So this is one example of chart pattern. Then you will have a triple top. You will have a triple top. You see it come back again and form like this. So this is a triple top. And when you see this, it's also a sign that, okay, you will have price move the opposite direction. Now look here. This is about to form a triple top. First top, second top, third top. And you see that price is beginning to come down. So if this triple top holds, we may see price push down all the way to down here and complete the movement. Kagane?
Yes, I understand.
So that's it. Then the inverse is double bottom and double top. The reverse. So like this, like this, like this. So this is double bottom or triple bottom. And when you see it on the chart, it means that it's a reversal pattern. You could expect price to continue going the opposite direction. Let's look for one. Exactly. Kagan, there's a very perfect example here. Price came, see this horizontal level. Let me delete some of these things. So you see that when price came here, it formed the first bottom here. It came and formed another bottom here. till this right here was a double bottom. Immediately it gave the double bottom, you see that price pushed to the upside. So it came back down again and completed the third bottom. Immediately give the third bottom. See how price moved away by far with speed. So this is another way for you to trade the market. This is a perfect example of double bottom, of triple bottom, and even double bottom. So that is one example of a chart pattern. Then which other chart pattern would I tell you? We have a head and a shoulder. And a head and a shoulder is like this. Let me draw a head and a shoulder for you. Uh, when you see price come like this, come down, came higher, came down, then came like this, and form like this. So this is a head and a shoulder. And the opposite is called inverse head and shoulder. So when you see price form a high, come back, come and form another higher high, comes back to the same level, form a smaller high. This is a very good sign that price will reverse. This is a good sign that price will reverse. And let me draw the horizontal level. So this is the horizontal level that price is doing this on. So you're likely going to see price break down to the downside. You're likely going to see price break to the downside like this. So do you understand this pattern?
Yes, I do.
Yeah, so this is a head and a shoulder pattern. Let me look for the example on the chart. Okay, so we could say this is a head and a shoulder. So it's not all the time that it happens as sweet and clear as I had showed you in that example. Some of the times it doesn't happen or occur very clearly, but then you could still see that this is a head and a shoulder. Now let's use, for example, this particular place. You could label this as a head as a shoulder. You could label this place as a head. You could label here as a head. You could label here as the left shoulder. You understand? So this is one shoulder, head, one shoulder, and now we have price plummet. We have price rushing down. You understand? So this could be a head and a shoulder. Then let me look for an inverse head and a shoulder. If this level was lower, if this level now was a bit lower, this could be a perfect example of inverse head and shoulder, but it was not lower, it's the same. So it's double bottom and triple bottom. Yes. So like now look at this example here. You can still call this a double bottom because it doesn't always happen very neatly. The chart is always erratic. It's not 100% clean. I will draw an example for you like this. I used to draw it very cleanly, but then when it happens real life in the chart bar, it doesn't happen as clean as this. It happens haphazardly. So you need to also be very calm and understand that this is actually what is happening. Because you see here, the double bottom did not form in equal places. This bottom was quite lower, but it's still a double bottom. You still call this a double bottom. You understand? So I can't find another example of head and shoulder. But then I hope you get the concept. I hope you understand the concept.
Yes, I do.
Good. So that is example of chart patterns. There are many different chart patterns and what they mean and how you can use them to trade. But these are just a few examples that I've given you. So you have the head and the shoulder, you have inverse head and shoulder, you have double top, double bottom, triple bottom, head and cup and handle pattern. You have there are quite a lot of them, but as I said, these are very basic strategies and trading concepts. Very, very basic. If you did say you want the week for head and shoulder, you can stay a whole week, you will not see one head and shoulder for it to trade. But there are also a lot of
Okay.
other advanced strategies, advanced concepts that you could be using to trade on a daily basis. Advanced. I can't wait to start teaching you a lot of these advanced stuff. I can't wait. I will show you. I usually do a daily analysis on the trades I take. You will see them on my Telegram channel. But every day I could be showing you, we could be doing a Zoom class in the morning. We'll like forecast what to expect on the market. Because every trading day, you can like sit down, do your analysis and expect what the market should do as a day trader. So these are just very basic concepts. When we start looking into advanced concepts, I'm going to zoom in, go to the lower time frames, and then show you how to look for liquidity, how to look for an order block, how to trade imbalances, and all of those things. Then, one thing I must also note is that all of these chart patterns and candlestick patterns, they are usually stronger on the higher time frame. Any pattern you see happen on the higher time frame is most likely going to hold than a pattern that you see that is happening on 1 minute or 2 minutes or 5 minutes. Let's go to the 5 minutes. So you understand, if a chart pattern happens on a 5 minutes, it's likely going to get disrespected, unlike when it happens on the 1 hour or the 2 hour or the daily. You understand? So this is the 5 minutes. Let's look for some chart patterns. We could call this a double top. This right here. First top, second top. So you could call this a double top if you want. But if you're a double top trader, you will not go anywhere because this thing can get violated easily, especially on the lower time frame. Can get violated easily. So the higher time frames are usually the strongest, and they are the ones that hold the most. And there's what we call liquidity. Next week, I'm looking to trade this double top on Tuesday because I won't be trading on Monday. So let me show you something that is called liquidity, just to give you like what we're going to do tomorrow. Whenever you see a double top and a double bottom like this, this is an equal high. If you look very well at this thing I'm showing you, you see that this place is equal. You understand, Kagane? Look this week and look at this week.
Yes.
They are equal. This is what is called an equal high. And whenever you see an equal high like this in the market, it's liquidity. Price is usually going to come and take out this equal high or equal low. Most of the time, price will come and take out the equal high or equal low. So why? Because it is liquidity. Liquidity is resting above here. And what is liquidity? Liquidity is when you have orders or money lying up here. So somebody has placed a sell and is selling this market and has placed his stop loss exactly on this week. Remember when I was giving you an example of those trades I would have taken? I was placing my stop loss on the week. If you remember,
Yes.
I was placing my stop loss on the week like this. So somebody is selling this market now and he has placed his stop loss here. And markets usually will want to come and take out this stop loss. Why? Because this stop loss is like more fuel to push price. And that's what is called liquidity. Don't worry, tomorrow we're going to dive deep down into what liquidity is, smart money concept, other blocks, and I will explain further tomorrow. But as for today, I think we're done for today. So that's all. So today is just an intermediate course, basic strategies, basic Forex concepts. I will advise you that you go on YouTube, spend some time, watch more of these videos, understand what these concepts are, market structure, support and resistance, candlestick patterns. Just play around with it and get more understanding of them. Then tomorrow we'll go further. And remember, I told you at the start of this bootcamp, this is like giving you a good foundation and also giving you guidance on how you should learn these things and what matters the most for you to pay more attention on. because I told you this is not what you should really be paying attention on. There are a lot of forex courses that don't even say this. When you buy the course from beginning, you not go even see this one. It's straight up in advanced course that they're teaching you. But then I would like to give you an exposition on all of this stuff so that you have an idea before we go to the advanced stuff. So this is pretty much it for today. Tomorrow we are going to go advanced mode. We're going to be touching uh smart money concept. So Said, I hope this class was helpful. I hope it was valuable to you in some way.
Yes, I've jotted a lot of things. I have to go over them again, the video and the YouTube as well.
It's all right. That's good. That's good. All right. So that will be it for today. Cheers and have a good night, bro.
Thank you.
All right. Bye bye.